Sure, yeah, we're tracking the markets on a very regular, almost daily basis. Certainly we look at the numbers January to May compared to last January to May, so last year's similar period. The numbers for the UK are down 50%. They're down over 30% for both France and Germany. But then there's pockets of resilience. There's the Netherlands, for instance, where you're only down about 4%. You've got Finland and Denmark, which are up positively, small markets, but they're at least showing positive improvements in investment volume. So there's a bit of a mixed story, but the bigger countries are really quite down considerably. But and I caveat that with an optimistic but, in that we're always generally in real estate comparing things to extremes. We're comparing 2016 numbers to 2015, which was the highest point we've seen. We compare yields to the 2007 peak level, so we're always comparing to peak. But actually, if you look at long-term averages, the first part of this year was it was at average. So to the point that can a 2015, apologies to the fee generators, but can 2015 happen every year? No. There's just not enough stock, not enough ability in Europe to generate that sort of transaction activity. So 2016 will end up on record being an average year. Which isn't, and that's not taking into account a second half of the year boost, which, if you look at the Scottish referendum, certainly after Scotland voted to remain in the UK, there was a significant boost to activity for the next 6 months in Scotland compared to England, compared to the rest of the Eurozone. I would expect to see that sort of boost for the UK and potentially the Eurozone after a referendum, which hopefully goes the way that Walter predicted.